Ricken Financial presents Kickin with the Rickens, redefining retirement. Gerry, Ricken, and Heidi Ricken Provost want to help you reach the retirement you deserve. Let's build a strategy that gives you the confidence while meeting your financial wants and needs. Meet the team at rickenfinancial.com. Now, Kickin with the Rickens.
Thanks for subscribing. Thanks for downloading. Thanks for listening to Kickin with the Rickens podcast. We are here with retirement planner Heidi Ricken Provost and licensed insurance professional Gerry Ricken. My name is Mark Owens. We invite you to get more at rickenfinancial.com. You can get all the information here in the show notes. Thanks again for subscribing. Now, let's get to the show. We're going to have a good conversation about your tax strategy. And to get that started, Heidi, I heard someone once say it is an honor and it is a privilege to pay taxes in America. I agree and I disagree. What say you?
Ditto. I agree and I disagree. It's an honor and a privilege to pay our taxes, but it's also a privilege to only pay your fair share and nothing beyond that. Unfortunately, a lot of people don't plan for taxation in the future. We prepare the income tax returns for our client base, and so that's income tax preparation, where you come and we look at what happened in the past and we put it on a piece of paper, shore it up with the IRS in whatever state you're living in so that you can pay whatever you owed them for the past. But most people don't sit down and plan for the future, which is what tax planning would be. So let's talk about what some tax planning can look like in your life, because you do have time to plan for the future and you don't just have to wait till April to talk about the past. You can plan for the rest of your life. We have a client in the state of Kansas who owns some farm ground, bought it for dirt cheap way back in the day. Family hunted on it.
We have lots of clients in the state of Kansas that have farm ground.
Well, actually, yes, that is true. But this particular guy I'm thinking about right now, the first conversation we ever had with him, here was his first question, Mark. I've worked my whole life, Heidi and Gerry, and I've been paying the tax because, you got to pay taxes. But what can I save for the future so that I don't have to pay the IRS ever again in my life? Because when I retire, that's it. I want to be done paying tax.
Yep.
And, he was brilliant. He put the plans in place so that he doesn't have to pay. He does pay some tax, but he doesn't have to pay as much as he would have been paying prior to seeing us. So he had this piece of farm, and he gives Dad a call one day.
And he said, you know what, I don't have much cost basis, which is the amount that he paid for this ground, but they offered him a great deal of money for it, and he just couldn't pass up. Everything's for sale to price, that's kind of the deal here, and he didn't want to give it up, but he couldn't really pass it up. Mm-hmm. So he said, what can we do? What can I do creatively to spread this tax over a period of time, or at least reduce my taxes? So we came up with an installment sale idea, and he actually entered into an installment sale with the purchaser, which allows him to spread his tax over a certain period of years. And then he pays the tax. It doesn't bump him into the next tax bracket in any 1 year. He pays the tax over time. And then what's he do with that net profit?
Well, let's talk about what an installment sale is so that you can understand what that means. Someone offered him a dollar amount for his land. Instead of paying that up front, he worked out an agreement by giving us a call and saying, okay, if we spread this over time, where do I spend the least amount of money on tax? So we were able to forecast out all of the taxation for the future as we know the tax laws to be today. And the sweet spot was about 15 years. So over the course of 15 years, instead of paying the dollar amount up front, this guy is going to pay him a certain chunk of change every single year so that by the end of 15, that full dollar amount is paid to him in exchange for his farmland. If you're going to do something like that, please contact an attorney and make sure you have a very solid contract and sales agreement put together, because he made sure that at the end of 15 years is when the transfer went through, but that he gets to own his own property till the end of that. So after tax each year, you have some money to invest. And what are you going to do when your first question is, I don't want to pay anything in tax ever again? Mm-hmm. Well, yeah, you got to pay the tax when the money comes into you, but then how can he invest it to reduce taxation for the future when he doesn't need this to live on? Because that's a very important fact here. He doesn't need any of this income. So he said, what can I do for my kids and my grandkids? Because I know that
his grandchildren.
Well, exactly. But he's like, for generations to come, things are just going to get more expensive. How can we help them out in the future? And we came up with something pretty fun that this family had an opportunity to decide whether they wanted to utilize or not.
So what would that look like for you? Well, what you could do is take that asset that you've accumulated over your lifetime and sell it over an installment sale. And as Heidi mentioned, it could be 15 years, it could be 10 years, it could be 5 years, it could be 8 years. It could be any time you want to enter into one of those installment sales, you want to understand what your taxes may be and how we can spread those over time and what makes the most sense based upon the other income that you'll have during that time period. So the main thing to do is just plan your tax strategy so that it meets your financial objectives, so that you can pay less in tax on an annual basis and not be suffocating by a big tax burden up front.
So you could be able to spread your tax over the course of multiple years instead of having to foot the biggest bill up front, because our philosophy is it really doesn't matter how much money you make. What matters in the end is how much you get to keep in your pocket after you pay the IRS and whatever state you're living in. So if you can utilize an installment sale and spread your tax over the course of time, you might be able to have some more money in your pocket so you can invest it in a multitude of other ways that, we'd be happy to go over some other ways that you could invest those funds. We just need a few minutes in order to talk about that. If this sounds like something you want to chat about, maybe you own a business and you're getting ready to sell the business, or you own a piece of rental property, or farmland, or something like that that's appreciated over time. Well, what's the best strategy for you to sell that? If you want some tax advice when it comes to that, give us a call at 314-207-6211, and we'd be happy to chat with you and see if we can help you come up with a strategy so that you can forward plan for your taxation instead of just sitting here and footing the bill when it comes to tax time for the previous year.
Gerry, Ricken, summertime is here. Taking some road trips.
Boy, did it come in with a force.
You
this
are
year,
not
because
lying.
On Friday, when the summer solstice hit, we got over 100 degrees in St. Louis for several days in a row.
All right, triple digits. Well,
yeah,
it's good to see you again.
It's great
to see
awesome.
you.
Just
Everything
awesome.
Feels like
Welcome to summer.
110.
Yes.
So define for your summertime, Gerry, Ricken, like what is the perfect road trip or vacation? Are you a beach, lake, mountains, or are you a sit on the front porch with a favorite book and leave me alone type of vacation? Or what's your best?
The last thing I do is sit on
Sorry,
the
that
front
was
porch
funny
and
to
leave me
me.
alone.
He can't sit still ever.
No. So my perfect vacation is just doing whatever comes to mind that we plan out. We do plan out our vacations a little bit, but we do as a family as a family, because spending time with family is probably the most important thing I know it is the most important thing that I do. Is spending time with the family, and whether we're on the beach and walking, for miles and miles on the beach, which is what Sheila loves to do. So she drags me along, and I play along.
Your heart will thank you.
My heart will thank me.
That's what Mom always says.
Yes. Or going hiking in the mountains in Colorado or wherever we are. Doing hikes, or going to breweries, or going to distilleries, or going to wherever.
Exercise the liver, too.
Yes, exactly. So wherever we want to go, but it's spending time with family. And when you think about family, I always think about, serving our families and our clients and allowing them to pass on things to their children and their grandchildren. And I know we just talked about, doing some planning with respect to installment sales and that kind of thing. And we talked about it, selling a farm. And one of the things you can do to pass on generational wealth and to build generational wealth, because a lot of clients want to do that. They want to leave something behind, and not just the invoice from the undertaker. But what they do is they want to leave something behind, and one of the things we can do is leave tax-free income behind for future generations. What you could do if you did one of those installment sales, or you're selling a piece of property, or selling anything, you can take that money and infuse it into a life insurance policy. And when people think about life insurance, they usually think about death benefit. This is not about death benefit at all. We suppress the death benefit to the lowest amount the IRS allows us to make, and we put as much cash in there so we can build it, because insurance is treated differently in the Internal Revenue Code than any other financial instrument. And you can use it to build tax-free income for the future. So, you could say, okay, my kids are doing well, my grandkids, I'm worried about them. Why don't we insure the grandchildren? We'll put the money in. It will grow tax deferred. They can use it when they're adults. Say they want to buy their first home. They can pull it out and lend it to themselves, become their own bank in essence. then never have to repay that, and the repayment happens at their demise. Then whatever death benefit is left over, the great-grandchildren will receive that tax-free. So it is a tremendously powerful tool to pass on your legacy to the next generation, the next generation, and the next generation.
Let's rephrase that a different way too, because we all visualize and think in different ways. So as you might be able to tell, Gerry is that licensed insurance professional. He gets into the weeds with this, and he can peel back the curtain, show you a couple hundred pages of the illustrations and go over all the data in the background and everything. But sometimes people say,
Jan.
yeah, what the hell did that guy just say about tax-free generational? What is that? Okay. So here's what you can do. If you have an asset of any kind that's after tax money, okay, it could have come from anywhere in the world, and you're concerned about your kids, your grandkids, people down the line in the future, you can insure their life, and instead of paying the smallest premium for the highest death benefit in their life insurance, you pay the highest premium for the smallest death benefit on their life, and you put some dough away in this policy for them. We call it tax-free retirement, because you've already paid tax on this money. You're investing it after tax into this policy. And guess what? There's a whole lot of flexibility in it. So whoever the insured is, if you own it, because I'm the one funding it, I own it. I get to be in control of the money as long as I'm alive. Then when I'm gone, someone else gets to be in control of the funds, and it may be the insured or not. But say I own a policy on my grandkid's name, starts with a G.
Okay.
G's policy, they have access to it as long as I have allowed control. But in the future, say they're going to college and they need some money. Well, there's not that many confines on this thing. You can pull some money out, loan it to yourself at a 0% interest rate so that you don't have to pay tax on anything, and you can use that money. If you want to buy a house, if you want to, retire one day, say this kid, they are a go-getter, but they really want to retire at 55, and they're going to need some extra income. They can turn on a stream of income for the rest of their life without having to pay tax on it. It just loans against your death benefit upon your demise. But the point that Gerry was making earlier too, not only does it work for you while you're living, because if you have full control over this while you're living and funding it, you can use the money for yourself too. Then it goes to whoever you insured, the life that you've insured on. So G gets it, after I pass away. Well, whoever's insured, when they pass away, it has to have a death benefit in it in order to be considered life insurance. So in essence, you can do 3, 4, 5 generations of tax-free income and tax-free wealth and able to pass more money on into the future simply by paying the tax up front before you fund the policy to begin. So if that sounds like something you want to talk about, it can sound a little confusing on the radio, I'm not going to lie, because at the end of the day, we can't draw it out for you if you're listening to us right now on the radio, but we'd love to draw it out for you in our office. So give us a call at 314-207-6211. Let's see if this is something that could fit into your financial future, but we want you to really, truly understand what it could mean for you and your family. And at the end of the day, like we said, it doesn't matter how much you make, it matters how much you get to keep. And if everything that you invest, you get to keep in the end, and it stays in the family for generations to come, how beautiful would that be if your grandkids and your great-grandkids knew your name because you left a tax-free legacy behind for them?
And you can really do this by paying pennies to receive dollars. And that's the power of life insurance and the tax-free buildup of death benefit or the cash value inside that policy. It's really carving out a piece, putting it away for future generations, so that you make sure that something is left behind. You can leave your IRA behind, that'll be taxable to your heirs, or you can leave an instrument like this behind, which will not be taxable to your heirs.
Yeah, and you can diversify your tax risk while you're living by having something like this in your tax portfolio, because you don't just have to be a kid to be insured. If you have 10 to 15 years before you would utilize these funds, you can insure yourself on your own life and put some money in here and make it work for you in the future too. So it's a way that you can diversify some of your tax risk for the future. You just have to have a little bit of time for something like this to work well in your portfolio.
Yeah, it's not one size fits all. If it works, it works very, very well. But if it doesn't work, we're not going to force it to work.
What about qualified charitable distributions? How could that be an opportunity for tax mitigation in retirement?
That's a great question. Gerry mentioned just a few minutes ago, you could have an IRA that you leave behind for the future. So if you do have money in IRA form, in those traditional IRAs, 401ks, the money that you set aside for the future to pay tax on it when it comes out in the future, well, when you're, born in 1960 or after, the future starts at age 75 when the government tells you start having to take some money out of those accounts in the form of required minimum distribution. So if you have to take a required minimum distribution out of one of your IRA funds, you don't always have to pay tax on it, because what you could do is turn it into a QCD, Mark, like you just asked about, a qualified charitable distribution. So as long as you can prove that that IRA money went to your bank account and then went away to charity, you don't have to pay tax on that while satisfying the need to take your required minimum distribution out of your IRA. So it's a simple way of giving money to charity and being able to give the gross amount of money you'd like to give to charity, not the net amount after tax, because you don't have to pay tax on it.
So it's a double benefit. It's a benefit for you, and it's a benefit for your charitable cause.
Beautiful way to have a tax benefit for giving money to charity when you're in your retirement years. And if that sounds like something you want to discuss and see, if it fits into your portfolio, if there's a way you can structure how you take your required minimum distribution so that it can fit into your financial future, give us a call at 314-207-6211, and we'll see if we can help you make sure you have that paper trail and take advantage of all of the money that you give to charity throughout the years, that you don't have to pay income tax on whatever income you use to pay for it.
Heidi, same question to you. We asked Gerry a couple of minutes ago. We're into it in summertime. If you get the opportunity to shut it down for a couple of days, get off the grid, what does Heidi, Ricken, Provost, what does that look like for you, your perfect vacation day?
I love that you asked about getting off the grid, because my ideal vacation day would be to truly get off the grid, maybe even just throw my phone in the ocean or something for a hot minute. We all know that never actually happens. There are 5 million different means of communication 24/7 of how to get a hold of me. But I'm kind of unlike my dad. If I had a true vacation day, I would love to just plop my butt in a lawn chair or the sand somewhere, enjoy a little bit of sunshine with my sunscreen on, because let's be real, my skin is basically see-through and I have to be covering it with some SPF. But enjoy a couple cold beverages and just relax for a hot minute, because, life is so go, go, go. I don't take the time to slow down and relax and live in the moment very often. And it would be really nice to just put my phone away and just live in the moment and experience God's country and just, thank the Lord that I'm here and get to plop my butt in the sand.
And then tell your dad to slow down for 5 minutes and join you for a second.
I know, right?
You know what, though? I do have some of those beverages after I do slow down, Mark.
Well,
That's how you tease him.
We do like to imbibe a little bit,
know,
but
right?
either that, or I will say my second favorite vacation is to go to wine country, because I love Sonoma. It's a beautiful area and get to go taste a little bit of new wine and
the good stuff.
And have a professional driver. Shout out to Henry. He's our guy.
Henry's awesome.
When we're out in the wine country, we have this guy that comes and he'll drive your rental car for you. He's fully insured and everything. Don't worry.
That's funny.
But,
my wife, Gretchen, makes fun of me because she wants to go to the wine country, but I'm cheap. She's like, Mark, there is no box wine country. So
Fun
Slap
fact.
the bag.
Fun fact. There actually is. It's not cheap to get there.
Yeah?
But in the country of Australia, almost all the wine comes boxed.
No way.
So.
No way.
Oh, yeah.
I'm in.
So, maybe we just need to take Kickin with the Rickens on the road to Australia.
Road trip.
And have a little boxed wine together.
Dude.
Because I will say, even like their $3 boxes of wine out there, they call it Goon.
Goon.
It's delicious.
All right.
So
let's find it.
Let's harvest those cheap grapes out there and enjoy it.
I will find the plastic bag out of that box and treat it like an adult Capri Sun. Stick a straw in there and go to town.
Oh, yeah.
We're talking about the importance of tax strategy here. You brought up some conversations that you've been having with the families you serve about their vacations and how it relates to their tax strategy as well.
Yeah, and I was talking about harvest this morning with a client of mine, because he actually has a capital loss carry forward. He's a farmer, and he lost his harvest one summer because of the rain. And, he was saying, it's been raining so bad this year. My family and I are just going to go on another vacation, and we're probably going to have to take a loss again, because our fields are just flooded and it's not, things aren't going well. We're probably not going to have much to harvest.
Right.
And he was a little disappointed about that. And as he's telling me this, I said, well, what are we going to harvest for you tax-wise? He looked at me like I had 12 heads. He was like, what on earth are you talking about? Well, he didn't realize that all those losses he's accumulated over the years, that's a capital loss, okay? So you don't get to do anything with it. Each year he's taken $3,000 off the top of his income on his tax return.
That's that limit by the IRS out there.
Yep. But he has quite a few accounts. We call them non-qualified accounts because they don't have a retirement tax status on it. But he has some brokerage accounts, some CDs, money that you have to pay income on right now that he's paying interest and dividends on. And we had a long conversation about how instead of paying interest and dividends, which cause ordinary income tax rates, you can flip the way that you're investing that money so that it builds capital gains for you. And when you have a capital gain, you can offset the capital loss on your tax return. You can realize the gain of your money, take it home and put it in your pocket, and you don't have to pay any tax on it because you get to harvest your tax losses.
And a lot more than $3,000. If you had a loss of $10,000, you could take $10,000 of that loss carry forward and apply it to today's capital gains.
And that was just my first conversation of the day with a client today, but it wasn't the last. We actually had multiple people come see us that were saying, we have all these accounts, we put money in here years and years and years ago when mom and dad taught me how to open a brokerage account, or when I inherited money, or, when we built up our savings, then we stuck some in this investment account. We don't really know what we're doing with any of it. We just put the money aside for the future, but the future is today. And now if we take that money out, if we sell it, so they'd have to sell the assets that are in their brokerage accounts right now. If we sell it, we're going to have to pay tax on it. Well, if you have any losses to offset the gains, you don't always have to pay the tax. So this is so personalized and specialized to each individual person we will meet, because I will tell you, every single person in the world has a different tax situation. No two tax returns look the same. Your tax return's like a fingerprint, okay?
Wow.
I liken it to a fingerprint and a strand of hair because when we combine the two, the DNA is even that obscure and different.
So true.
From each of us. But, since your tax return's like a fingerprint, if you need someone to just kind of stick their X-ray eyes over it and tell you, hey, here's what you can do to take advantage of the losses that you've carried over for years and years and years, or to pay a little bit of less tax than you're prepared to pay on a capital gain. Give us a call. Let's look at that tax return together and see if there's any room for improvement for you to plan for the future. Instead of just sitting here when you get your tax return done next year and saying, oh, you should have done this. Don't let the shouldas, coulda, wouldas get the best of you. Give us a call at 314-207-6211, and let's really take a deep dive into that tax return together.
Unfortunately, we see so many people who come in and say, oh my gosh, my broker sold this, my broker sold that, and they don't really know what their gains are until March of the following year when they receive their statement, their 1099 form, that's the IRS form, that reports the gains and losses. And all of a sudden they're like, oh my gosh, I have to come up with all this money now because of what happened in my portfolio. Well, we don't do that kind of planning. We don't do that kind of transactional work, I guess.
Yes, thank you.
We do
plan
planning.
so that we don't do that.
We do planning so that we don't have a surprise after year end. We know what's going into the year. We know what's happening during the year, and we will plan to make sure that there aren't those surprises come April 15th when you have to pay the IRS.
And at the end of the day, we'd love to have the types of conversations like we're having right now, because if you're investing in the market, that's a great thing. It fits well into your tax diversification, especially if you have some IRAs out there, or Roth, or 529 plans and savings accounts and yada, yada, yada. The sky is the limit. But if you have money in investment accounts that don't have a retirement, name on them, they're just an individual brokerage, a joint brokerage, maybe it's owned by the trust. There are different ways that you can invest your funds to reduce your taxation by simply turning it into capital gains rates versus ordinary income rates. So right now, if you have dividend-bearing stock and it's paying you a dividend each year, you have to pay your ordinary income tax rates on your dividends. You could be able to invest that in something that's going to kick off a long-term capital gain by being held for 366 days. So, if you need a second opinion on, am I even invested in the right thing? Because most people sit down and we talk about investments and diversification, and you look at it and you're like, well, you need to be globally diversified between stocks, bonds, mutual funds, ETFs, in each segment and sector. And usually the conversation is just about risk tolerance, okay? And making sure that your investment
market risk tolerance
is following the market risk. Let's talk about the tax risk too, because if you can be globally diversified when it comes to your market risk, why wouldn't you also globally diversify your portfolio when it comes to your tax risk too? So that in the end, you're making the kind of money you're expecting to make from your market risk and taking more home in your pocket because of the tax risk that you've been diversifying. So it's kind of a huge quagmire, and it can feel like a lot to sit back and DIY yourself. Mm-hmm. Please don't be a Pinterest fail, because we see so many people try to DIY stuff that they see someone else do out there in the internet and on the, on social media. We don't want that to happen to your financial future. If you want to partner in this, give us a buzz at 314-207-6211 or head over to rickenfinancial.com, RICKEN financial.com, because there are so many different opportunities we can help present to you of how you can take control of your financial future. You just may not be aware of them.
We just live and breathe taxes here. We want to make sure that you have the information that you need to prepare for the future.
Insurance products are offered through the insurance business Ricken Financial LLC. Ricken Financial LLC is also an investment advisory practice that offers products and services through Impact Partnership Wealth LLC, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by Ricken Financial LLC are not subject to investment advisor requirements. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This podcast is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. Ricken Financial LLC is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Ricken Financial LLC.
Please remember that converting an employer plan account to a Roth IRA is a taxable event. Increased taxable income from the Roth IRA conversion may have several consequences. Be sure to consult with a qualified tax advisor before making any decisions regarding your IRA.
Tax preparation and tax advisory services are offered through Ricken Financial. These services are not offered by IPW and are not subject to investment advisor requirements. These services referenced are an outside business activity not offered through or supervised by IPW.